From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for April 20th, 2018. Today we're taking a look at the USDJPY, the US dollar versus the Japanese yen for today's trade analysis. Let's get started here on the daily time frame. We see two different really trend directions that this currency pair has been going in over the past several months. You see the previous downtrend, the blue trend line, clearly moving lower all the way down here into the mid 104s. Since then, capping out down here at the bottom into March, we've been inching our way higher. Broke through the blue trend line, got above it, and just been inching our way higher. However, for the past several days, and I'm going to go ahead and zoom it in one time here, maybe twice, several days, let's count them out. Today included 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days now. We have been finding resistance at the orange shaded area. Orange zone at the very top of the chart is 107.30 to 107.45. So we can see clear resistance there, and the market's had a difficult time getting above it. Now today, with a good solid run for the US dollar over the past day, we can see the market challenging and testing above 107.45. The question is, the real question is this going to be the real deal breakout? Because we've seen this before, haven't we? We've seen it right here where the market got above right here where the blue circle is and then suddenly turned back around and went back in the other direction. I zoom out one time, you can see the left-hand side of the chart where the black circle is. We can see it above the orange zone, then turn right back around and went back down in the other direction. So clearly, we've seen false breakouts. We've seen the market challenge this orange zone before where both of these circles are and not successful in its breakout. So we need to be careful in assuming that today is a real breakout because we've seen it before. Now, it's pretty good confidence in it, but again, we need to be careful in assuming. We really need to see a real good clear signal that this is a breakout, not a false breakout. So the best way to do that will be to wait for today to close. You know, if we did that over here, we were safe. If you waited for this day that was a large blue candle to close, it closed back in the orange zone, then you didn't buy it and you were safe. So the same thing here. If this doesn't close above the orange zone and closes by the end of the day back inside the orange zone, then we're safe and we didn't take a buy. And we don't risk the long when it's going to turn back around and go back in the other direction. So that's the safest way to do it. Now, that means that we might miss some of the upward movement if it doesn't turn back around. So we want to be careful in assuming, but we'll look for opportunities for the real deal breakout 107.45. The way we're going to do that is we're going to take it down here to the 4-hour time frame. So as we get down here to the 4-hour time frame, we can clearly see the market got above here and so far has stayed above here. Let's zoom it out one time. So far has stayed above here. Well, again, the last time we did this, right here where the blue circle is, it did that here too. We saw a clear 4-hour candle above. It came back down to the orange zone and then turned back lower. So that's why I said the best way for us to know that this is going to be a real breakout is that the daily closes above. Again, over here where the blue circle is, the daily didn't close above. It was all within that same day, got back inside the orange zone, leaving that strong wick on the daily time frame. Here, we want to be careful in assuming. So if this suddenly turns into a bearish candle, we see it turn into a bearish candle and come back inside the orange shaded area, that's going to tell us that this is not a real breakout, especially if it comes back in and then gets back underneath it. So if we see that, we want to stay out of the longs. However, if we can see this stay above, even on the daily time frame, stay above this orange shaded area, that's going to increase our confidence that this is a real deal breakout, not a false breakout, and we can look for it to go higher. So what do we do with this today? Well, I think we can begin looking for those opportunities. As or if it dips back down to 107.45, the top of the orange zone, we look for that little bit of a pullback down here. It provides a fairly limited risk opportunity to go long and look for it to go up in the direction that it's going in. So a pullback allows us to get lower risk. Why does a pullback allow lower risk? Because your stop loss is going to go underneath the orange zone if you decide to do that. So if your stop loss is down here under the orange zone, how do you create lower risk? You allow the market to get closer to that where you would place that stop loss before going long. So for the day today, as long as we're above the orange zone, I think Buying on dips to the orange zone becomes an opportunity to target back to the yellow zone or higher in the direction of the current momentum for the US dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.